Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. It's Fed rate decision, probably the most important live show we've had for 2 years since we've had these massive rises. What are we going to see now? Well, we're going to find out. We just got a new member there. New members have been coming in all day. Omran Taraki has become a member. Thank you very much indeed for your support. Big day today. Are you ready? Let's get ready for the FOMC report live with Jerome Powell coming up live on the show. Special guest of mine. Absolutely. It's not anywhere else. No other channel in the world is broadcasting this. I'm the only person. Forget anywhere else. Where else are you going to be? You're going to get the best quality broadcast in Ultra HD, surround sound. Everyone's going to get a voice. Everyone gets listened to. Everyone can make a comment. And we're all here together as a family, and we're very, very excited by it as well. This is my portfolio. As you can see, we're up today everywhere. The markets are up today, 1.38. The S&P is up 1.38. I'm up 2.32. I'm doubling the rate of the market. I'm beating the market, pretty much beat the market nearly every day, but that's beside the point. 106,136. We just about touched 107,000 earlier. We just dropped off again, but that's expected. We're going to get some horse trading going into it. People have been scrambling around, trying to take profits. Well, I just sit and watch. I sit and watch today. Everybody can do what the hell they like. It doesn't matter what it goes up, down, or sideways. I know what I'm doing. I'm holding. I'm not selling anything. I'm not buying anything. There's already been the macro crashes. There's already been the overreactions. There's not going to be any more. Yes, there could be a 1 or 2% drop. That would not make it cheap enough for me to buy more. Absolutely not. I'm all in 100%. Of all the money that I'd be earning over the next couple of years is already in. I've just now got to work and pay it off, basically. But I'm buying it at today's prices with rates about to come down. I do not expect rate cuts to come down today, but we do expect a dovish signal for September. Remember, he's not going to say, rates are coming down in September, everybody, blah, blah, blah. That's not what they do. They don't do that. They just do it when they do it. But you have to read between the lines. That's what this is all about. So, welcome everybody on TikTok. Lovely to have you here. Welcome everybody here on YouTube, the home of our channel. And of course, welcome everybody on Rumble as well. Wonderful stuff. So, let's get ready. We do have a poll running right now, and I'm going to give you that to you. We will get a rate cut in 21 minutes. We'll have it live for you. You'll be the first to get it. I promise you that. In 21 minutes from now, you'll get it live, and I'll bring it straight to you. And then on top of that, we will then have the conference. The conference is most important because the conference is where we get the press interview Jerome Powell, and that's when we get the violent movement. That's when we see how things are going to go. It's not what he says during the presentation, it's what he says at the meeting. I've just had a friend request from someone called S1 Cario. No idea who that is. I cannot accept it unless it's a YouTube member. If you are S1 Cario in Discord and you've sent me a friend request, I cannot accept it unless you are, thank you Leah, unless you are a YouTube member. All right, for security purposes, I won't be doing that. Let me go and grab my latte. Okay. Nice latte, James, from one of my Martyn Lucas mugs. If you get one of these mugs, you always make money. It's a proven fact. It is. It's a fact. It is. Go below any video. You'll find the links, or go to the website, martynlucas.com. And you'll find mugs, t-shirts, hats, everything. I do them as cheap as I can, and they're expensive because they're one-off bespoke items. They're sent around the world. But I only make a couple of bucks on a mug. I can't make it any cheaper. All right? Anyway, let's bring the comments in. We've got Stephen Lewandowski. I know exactly where that is. DJ Hayes. It is so much better than Orlando. I have 400-ish 400, is that shares of Nvidia at 132? I think it will go to 150 by year end. Oh yes, I think that's quite safe. I see a $200 target on Nvidia. All right. So congratulations to all of you. But remember, you've got to consider your tax positions. Make sure that you trade in your IRAs and your ISAs in England. You do not do it on your brokerage account. You'll end up with, egg on your face, no money. No point doing that. All right? Make sure you don't pay tax on your money. Very, very important. Okie dokie. Thank you, 711, for your subscription. Oh, to Extra. Just subscribe to Extra, the behind the scenes. Yep. If you want to be part of the Extra channel, we're live 12 hours a day. Here is the Extra channel. There it is. Let me just share with you on the screen what it looks like. This is behind the scenes, 12 hours a day. This service is going to keep getting better. There's a lot more service coming to this channel. So please do join us there. It is free to listen in and watch what's going on behind the scenes 12 hours a day. You'll hear me setting up interviews with CEOs. You'll hear me talking to the members about latest news, stuff like that, whatever, behind the scenes, okay? But if you want to chat, it's $1.99 because we don't want bots and scammers coming in, advertising, ruining things, telling us all to buy Binky Bonk and Lucid and God knows what else. So to do that, we put a 99-cent paywall up, and these people making so much money, they couldn't afford 99 cents. So that stopped it overnight. That's why we are 100% members on the Extra channel. Consider becoming a member of the channel. It's only 99 cents. All right. And you'll be in a very, very good trading, investing community that are there to help each other, not to manipulate stock. That's not allowed at all. I don't do that, so my members don't do it. Okay, just a few minutes to go now. So let's go over to the poll and give everybody the poll. So before we carry on, we would like this message to get out today to as many people as possible. This is the most important live event we've done in 2 years. So consequently, we'd like to do that. The report will be live. I'll be broadcasting it live as soon as it begins. It hasn't started yet. So let's have some fun right now and let's get 100 likes so YouTube will suggest the video. Are you ready? Okay, here we go. Here we go. We've got 76 people in. At the moment, 76, 75. So the most we could get straight off the bat would be about 30 because our India audience are never signed into Google, just the way it is. So we're on 10, 5, 4, 3, 2, 1. We've now jumped to 24. Okay, maybe 6 more is as much as we're going to get right now. So let's do it. Everyone tap the like button. We want 100 likes so we can share this out so YouTube will suggest the video in 5, 4, 3, 2, 1. Let's make some money this afternoon, folks. 30. Fantastic. That was a nice jump. Look at that. 30. How many are watching now? 74. Maybe we could get 1 or 2 more, but that'll be it. Tap the like button and then we'll come back later, see if we can get 100. In 5, 4, 3, 2, 1. Let's have a look. 34. Well, that's more than I deserve. So there we go. We'll knock it on the head at that. Thank you ever so much, everybody who took part in that. Really do appreciate it. Okay. Right then, we'll be listening in. We've got all the numbers, we've got all the data, we've got all the charts. We're absolutely ready to go. I will give you some bad news first of all. Inflation rate went up in the European Union, but that was expected though. European Union, they were consensus. They say it wasn't expected. It was for me because what's going on in Ukraine. 2.3 was the forecast. 2.4 was consensus. Previous was 2.5. It actually went to 2.6. But that's only the month of July, though. We have to remember that. That's not the overall rate. The overall rate is coming down, hence why they've cut rates again. A Bank of England are expected to do it tomorrow. Mortgages have already been reduced. So it's bad news, but then it's good news, okay? So don't worry too much. Today, the Fed rate, we got 5.5, forecast 5.5, consensus 5.5. Not expecting a rate cut. But we expect in September. Today would be an overreaction. Well, it wouldn't be an overreaction. It would be good. However, if we got it today, it would spook the market. People would think there was more going on. There isn't, but people would think that. And the Fed are there to calm the markets, not to spook the market, right? They're there to protect the economy, or at least that's their job, or that's their aim anyway. So anyway, we're getting ready for that. We've got our broadcast. We've got our live broadcast ready. We've got absolutely everything you need for this. The greed factor is just moving to the right of center of neutral, heading toward greed. So we're nowhere near greed right now. We're nowhere near overbought. We're just getting back to where we were. So the fact we're up so much is just great. Hence why I use margin to promote it and push it forward. This is why I'm beating the market. Okay, so we got that ready to go. I'm still here. Hold on. I'm back. Okay. I'm back. Is everybody still with me? I rescued the stream. I had a break there. I'm back. Everybody still with me? Looks like some people didn't read the chat. I said, hold on. Yes, I'm not going anywhere. I've got backup power, backup internet, backup everything. All right. Okay. Don't go anywhere. I've got everything covered. In this studio, I have backup power, backup internet, backup systems. We get errors sometimes, and I am able to deal with it and continue. I never go anywhere. And I put in the chat, the moment there's something wrong, I put in the chat and I put, I'm still here, hold on, I'm back. And that's exactly where we are right now. It probably means I've lost it on Rumble, though. Yes. Yes, lost it on Rumble. That doesn't matter. That happens. So we'll go live and we'll end this stream. End live stream. That's the way it goes. Okay. That doesn't matter. Right. We're all back up and running again. Sometimes there are errors on other servers and it kicks it back. That's what the system's for. That's why it does what it does. Not going to worry about that. Okay. Right. Here we go. Round 2 of the rally. We had a little sell-off, got rid of some weak hands, and here we go again. Let's read the comments. Just became a member. Oh, Sicario. Is that you? Hang on. Sicario. Was that you who sent me a friend request? Let's have a look. Sicario, where are you? I can't see you in the chat. Can you just come back to me? Oh, it was probably off air. I don't know if he's here. If he comes into the show, I'll upgrade his account. So what was his name? No, he's not here. If Sicario comes in, let me know. That would be that person, possibly on Discord. So I'm going to message that person. He sent me a friend request. I can't do that. Please join me in live. Whoops-a-daisy. Live show so I can confirm it's you and upgrade you. Your message could not. This is because they don't share the server. They don't accept direct messages. Okay, well, okay. That's very strange. Just do that a minute. Taking care of a member. Just bear with me. Okay. I see what's going on there. Right. Let me do this now. I'll be right back to you guys. We are early. Got 8 minutes to go yet. Live now. Okay. Let's see if Sicario put the gold jacket on. Well, we've already had the rise. We put the gold jacket on for special occasions, for making lots of money, which of course we are today. We are breaking all-time records. Okay, if everyone goes mad and crazy, I'll get the gold jacket. Who wants me to wear the gold jacket? If you do, go and say it's a very lucky gold jacket. Always brings me money. If you want me to put the gold jacket on, light up the chat. Let me see who wants it. And I'll go and get it. Welcome back, Chris Schultz. It's back. Yes, you're back now. Yes. I'm not going anywhere. Put the gold jacket on. How bad Nvidia will drop after FOMC, I think. No, don't think it will. If we get July rates cuts, I'll eat my hat. Yeah, we're not going to get rate cuts today. I'm really enjoying my membership so far. The Discord is great. Florida boy, thank you so much indeed. Oh, hello. Yes, please, bring on the gold jacket. Go for gold. Everybody wants a gold jacket. All right, then. All right. Should I ask for super chats? I mean, it's a very expensive jacket. Should I ask for super chats? What do you reckon, MSK? Should I ask? I mean, it's very expensive for me to walk to my closet and get the gold jacket. It costs me a lot of energy. If I'm going to walk from here to the closet, it's got to be worth $1, right? I tell you what I'm going to do. I'm going to walk to my my closet and I'm going to get my gold jacket. And when I get back, I expect to see some super chats because it's the very least you could do if I'm going to walk to the other end of the house, which is at least 50 meters away because it's a very big castle I live in, all right? I'm an Englishman in my castle in Dallas, so you can imagine how big that is, right? I'm going to walk to the east wing and I'm going to get my gold jacket, okay? So, right? Okay then. Let's see what happens. Let's see if I can earn at least $1 for walking one end of the house to the other. All right, I'll be right back. How long have we got? We got 5 minutes before the announcement. This better be worth it. I tell you that. This better be. Otherwise, I'm going to pull the plug, and you can watch the FOMC report and meet Kevin. All right. Okay. And you don't want that. Bloody hell no. Heading back from the east wing. Okay. I don't see any super chats. I had to walk from one end of the bloody castle to the other. Well, that's not good. Sponsored walk with no money. Rubbish. That's the worst. That's the worst ever in the history of the world. Right. I think we'll pull the plug then. Pull the bloody plug on it. Sponsored walk. All right. Come on, Martin. Just bring on the gold jacket. Just bring on the gold jacket. Right, you ready? We're making money today. We're making money. You ready? Okay. Let's have a little look. Do you want to see the full ensemble? The full ensemble. All right. Here we go. Let's turn around. How long have we got? We got a few seconds. Here we go. The full ensemble. There you go. Look at that. That is a proper gold jacket, right? That's when we're making money, okay? When we make money, the gold jacket goes on. I tell you what, later on, Friday night, sitting at the piano, right, I'll put the jacket on that I got from Sir Elton John, the one he wore in Candle in the Wind. How about that? I've got a white sequin tailcoat. I'll wear that Only if everyone comes to the party on Friday. If everyone comes, I'll put Elton John's jacket on. I ain't messing around now. There we go. Right, 2 minutes to go. Hey, let it rain. I love it. All right, we need some sound effects because we're making money. We need some sound effects. Bring on the noise. Bring on the noise. Here we go. Okay, FOMC report. Let's kick it in. Countdown. Let's get ready to rock and roll. Let's speed up the service so we make sure that we are bang up to date. Here we go. We've got 2 minutes to go. 2 minutes to go. Now, thank you so much for the super chats. It will light up. If you put messages on, it will read it out. Thank you guys for that. Appreciate it a lot. Tap the like button. That's great, guys. Thank you so much indeed. All the money goes into supporting the show. Thank you very much. Okay, 2 minutes. Wait, what is a good FOMC or not? A good FOMC will be simply, another super chat. There we go. A good FOMC would be just a calm, dovish approach. The chair, comfortable, relaxed, happy with the economy, not reacting but being proactive. That's what we want. We don't want him to react and go, oh, we've had to suddenly, reduce rates really quickly because we're damaging the economy. No. We don't want that. We don't want that. Okay. So, I'm going to give you a chance to poll. You've got 1 minute. I left this.
Donated £1 through a super chat.
I left this to the last moment. Here you go. Vote now. X poll. You've got 1 minute to vote on the X poll. Quick. There you go. Quick. Is it going to be a cut, a pause, a hike? Undecided. You've got 1 minute on X. Quickly vote. We got 36% say cut. We got 40% say pause. We got 12% say hike and 12% undecided. Go.
Rallo1 donated $2.
30 seconds. Thank you, Rallo1.
Let IT rain $1.
Let IT rain? What about let it rain? Okay, we've got 25 votes. Come on. You've got 20 seconds. 20 seconds to vote. What's it going to be? Time to tell. Dead cat bounce. Absolutely incorrect. Said that this morning. Rubbish. No basis for that whatsoever. There's nothing about that statement which makes any sense at all. Okay, here we go. Rate cuts. Let's go.
Be different this time.
Matt Lazzetti, I'm going to put this in his mouth rather than mine, was talking about how this could be
go.
baked in more than a full rate cut in
the
September.
result is
and more than 2 full rate cuts by the end of this year. How much more can they deliver? That said, he has shown a willingness to really give a sense to what kind of weakness we see.
With your Fed decision,
5.5 unchanged.
There is no change to interest rate. There are a number of small changes to the statement, but this is not a see you in September announcement. The Fed's forward guidance remains unchanged. Quote, the committee does not expect it will be appropriate to reduce the target range
meeting
until
afterwards.
It has gained greater confidence that inflation is moving sustainably toward 2%. There's also no change in the overall assessment that economic activity has continued to expand at a solid pace. All of the adjustments are basically to adjectives. Job gains have moderated, the statement says, instead of remained strong. Unemployment has moved up, but remains low. Inflation has eased over the past year, but remains somewhat elevated. And in recent months, there has been some further progress toward the 2% inflation goal. If there is a hint about the future, it's this. Instead of saying risks to employment and inflation have moved into better balance, the statement now says the committee is attentive to the risks on both sides of its dual mandate. The decision was unanimous, and that's basically it. If there is going to be a hint about a September move, it's going to be up to Chairman Powell.
It's a two-part story, Mike McKee. This was the first part. The second part starts at about 29 minutes with that news conference in Chairman Powell.
That's what it's all about. The main part is the conference. That's when we get the sentiment. So if you've never tuned into one of these before, it's good news so far. That's why the markets are up. It's exactly as priced in, exactly calm, steady. What we need and what the markets want is to know where we're going. We want stability and certainty. All the markets want is to know where we're going. We do not want surprises. People do not invest billions and trillions of dollars of money not knowing where the economy is going. They want steady, they want reliable, they want a fashionable approach, not suddenly boom and bust. The Fed Chair Powell has done a great job. People would say he hasn't. Well, he's brought everything he said he's done. He's brought unemployment back into, jobs back into balance. Inflation is consistently heading down. The economy is strong. We're going to get a soft landing. This is all good. That's why the markets are holding up, and that's why they'll carry on going up, because we've got good reports on tech. We've been covering the tech. We've seen Nvidia, Microsoft all do good. We've seen rotation out of mega caps to take advantage of the rate cuts coming. Not because they love the rubbish stocks on the Russell. No, quick get in, make some money, come back and buy the megas. And that's what they're doing today. We've seen it now. We know the economy's strong. This is good. It's not amazing news for those who are day traders who just want to get in and out because you don't know what to do right now. You sell and then it just carries on going up. So you leave money on the table. Rubbish. It's good for medium to long-term investors right now, as it is most of the time, to be quite honest, in a good, steady economy. We are in a bull market. I love it, and I'm excited. We've got 26 minutes to go before we get the meeting, and that's when we get volatility. Okay, so, and it does present opportunity for quick trades. It's not going to go up enough for me to sell. That's 10, 20 years away, so that isn't going to happen. It's not going to go down 10%, which is what it would need to for me to even consider buying more when I'm already in a huge amount of margin. I don't need it to go down, or in fact, I don't care if it goes down. It makes no odds to me at all. But so for me, it'll be business as usual. I've got about a month to go before I earn another $200 on dividends. About $200 a month now on dividends, which is very, very nice. So, nearly $2,500 a year now on dividends, and all of that goes back into reducing my margin, basically covering the margin interest. I call it cost of business at the moment, but as that comes down, I'll be paying it off quicker, and I'll be earning more, hopefully, as I build my YouTube channel, which is my business and my income, right? Okay, so let's have a little closer look at the numbers. 5.5. Let's go look here. Let me change this to the countries. Let me refresh that a minute. Save. Okay, EU. Fed rate decision. I'm going to give you some more color now, more detail on what's just happened. But the big part hasn't started yet, so please bear with me. If it's your first time here, consider subscribing. We go live 12 hours a day. And if you'd like to tap the like button, share this out. It will help more people. By tapping the like button, it will share it out to more people. Let's have a look at the numbers as we wait for the conference. The Federal Reserve maintained the federal... someone can't spell the federal. They've missed off T, but there you go. The Federal Reserve maintained the federal funds rate at a 23-year high of 5.25. That's absolutely fine. The mega caps, by the way, will love this. They've got another month of earning more money. So this is great for them. Hence why come out of the smalls, come out of the Russell, get back in the megas. That's why the stocks are going to continue rising. For the 8th consecutive meeting in July 2024, in line with market expectations, policymakers note that there has been some further progress toward the 2% inflation objective. Although inflation remains somewhat elevated, also recent indicators suggest that the economic activity has continued to expand at a solid pace. Very, very good. Job gains have moderated. Very, very good. And the unemployment rate has moved up, but remains low. Very, very good. The central bank judges that the risks for achieving its employment and inflation goals continue to move into better balance. Perfect. 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 Exactly what I wanted, exactly what you should want, hence why the markets are up. The mega caps are going to love this now, and we're about to hit another new all-time high. That's why I'm wearing the gold jacket today. And as you look at that, 106,000 $585,000. My all-time high is 107. We should be there in a few moments. And that is an all-time high, 107,000. And remember, I started with $5,000. I've never shorted a stock, and I've never done options. I just simply buy and hold and buy the macro dips. That's it. Very, very simple strategy. And I never deviate from that at all, at least not since I rebalanced my portfolio back in January. Very different last year. Okay, let's look at the indicator. We've got neutral just moving to greed. People are now buying. They realize this is good for the market, good for the economy. So it's moved up. It was sort of 3/4 neutral. Now we're heading towards greed. This is very, very, very good. I like it. What about the poll? Did you get it right? Did you get it right? 50% of you, I'm guessing that's my members. My members, 50%, I'm guessing my members said pause. Some of you said cut. That was never going to happen. Hike, I think that's a joke. I don't think anybody thought it was a hike unless it's one of our scammers and bots talking absolute rubbish. 8.8% says it's going to go up. That's ridiculous. 50%, I would say that's my members, my viewers. You're spot on, dead right there. So congratulations, everyone who got that right. Did we get any new members? I want to thank, yes, we did. Jonathan Martyn, thank you, Jonathan Martyn. We've got Thomas Philippart, thanks for following me. What about Iceman? Thanks to you. And Seriously, welcome to you. I'll help you grow on X by responding to your comments. Jonathan Martyn, thank you. Ilargis Kurtz, welcome to you. Thank you very much. What else have we got here? D. Leo followed me. Thank you, Dio Leo. I will support you as you grow on X as well. That's we all grow together. Matt followed me on X. Thank you very much indeed. Cut. No, that wasn't going to happen. You want to mic Chris Schultz. Bad luck this time. You did not want to cut. Bad luck this time. That would have been very, very bad if we got a cut today. So I'm glad we didn't get that. Pause. Stephen Lewandowski was absolutely spot on. There's a seasoned trader, an investor, spot on as always. If you want to grow on X, follow me, and I always engage with my members. That way, I help you grow. Because if you want to grow, get someone who's growing on X to engage with you, and you'll grow, and your voice will become clearer. Pause. Congrats. That's right. Is that the Iraqi flag? I think it is, isn't it? Or Kuwait? Is it Kuwait? Kuwait or Iraq? Can't remember now. Welcome to you. Congrats to you. Thank you very much indeed. We've got 20 minutes to go before the event. A couple more followers. I'll help you grow as well. Red Beard and also Christian Nino. Thank you very much to all of you. I think I've covered all of the notifications, have I not? Oh, there's another one. Fed holds rates. Yes, indeed. Thank you very much. I'll like that as well. All right. What else? Let's have a quick look. How many we got? We got 443 through the stream so far. Welcome to all of you. Record numbers on views. 33,000 views. It's our busiest 24 hours we've ever had in the history of the show. Even more than the inaugural flight for Virgin Galactic. Subscribers is going around 1,000 subscribers since yesterday. So it's our biggest 24 hours as well on the channel. So thank you to all of you. Appreciate all of you very, very much for supporting the channel. We're just here to help people. That's what this channel is all about. Right. Okay. Unfortunately, we lost Rumble earlier. We had to... move to a backup stream. Okay, now then, we've got a few minutes to go, so I'm just going to take a moment just to mention, just before we get to the report, or at least the presentation, which is everything. That's when the volatility happens, but today it's going to be solid, I think. Not going to be too much. Some videos that have just gone out you may have missed. So if you go to the homepage of the channel, you will see here what we've got coming up tonight for you. Straight after this is the closing bell. This may be the closing bell. This event may be cancelled. We may just carry on because we've got Meta earnings tonight. Meta earnings. You cannot afford to miss Meta earnings tonight because another tech stock, this is what the rotation is all about. Meta earnings, join me for that tonight. We've got Amazon tomorrow night. We've got Chevron the next day on the morning. Sensei is back on Sunday with his show. And in between all of this is the opening and closing bell, which gets added as we do it. I don't put too many notifications out. I don't want to upset anybody by sending out too many notifications. If you look on the video tab here at the top, you will see what you've just missed. I've just made a special video. This is the psychology of investing. It's a 10-minute video. It's a lot of, it gets really crazy and fun at the end. I hope you'll get a chance to watch it all the way through. If you've not got a red line, that means you've not watched it, or part red line, partly watched it. Amazon earnings, Meta earnings, US stock news. I try and do that every day. When there isn't an earnings on, I can do it. Microsoft, how and why. We've given you all the trades, the technical trades, how to trade this. We've also given you the Microsoft must-see. That's the earnings. The NVIDIA noise. Lots of noise around NVIDIA. Everybody telling you it's rubbish and selling it and God knows what else. All over bubbles. No, rubbish. All rubbish. Just to get views on YouTube channels telling everybody it's going to go up forever or down forever. We're all going bankrupt. Absolute rubbish. This is the truth. This is the reality. And we were spot on with our trades. Bounce on 100, going to 200. There is the NVIDIA chart. 2x, why and how. We give you the full chart so you can see exactly how we say it's going to get to 2x. All right? Now then, just before, something very, very important. More important than me, more important than money, more important than all of you. Absolutely, because every one of us here has money because we're all investors, right? Those of you who don't know, I was voted by Elton John as the world piano man. This is my music channel. I'm trying to get to 10,000 subscribers so I can do fundraisers for free and give all the money to charity. I make no money on my music channel other than my live concerts on a Friday where people give me super chats because all my music is copyrighted. Okay? I just wish that Simone and the Team USA some good luck this morning with the win. But here's me, Elton John's jacket here when I did Lion King. I did Phantom of the Opera, got my own Vegas show. Look, this is me with my Vegas showgirls. And what I'm trying to do is get to 10,000 subscribers so I can do what's called YouTube giving. They allow you to do concerts where all the money goes directly to a registered charity. I take no money, it's free, there are no credit card fees, no charges, and it's a tax-deductible expense, C1D, whatever it is, for you to watch, right? So it's a win-win for everyone. All I ask is if you wouldn't mind, please subscribe to my channel. It costs you nothing, just so I can get to 10,000 subscribers. You don't have to watch any of my music, but if you can, just click on my music channel. I've given you the link in the chat. Tune in. There it is. And every single subscriber really helps. We only want another 5,880, so 4,200. But we're over halfway. All right, we're over halfway. I'd love if you could help me out. It'd be very much appreciated. I've just put the link in the chat. Okay. All right, 15 minutes to go before we get the report. As you can see, my portfolio is going up nicely. Once we get to 100 likes, YouTube will share this video out. We are now at 68. 68. We've got 111 watching. So we've got 15 minutes to go. So if you could, if you could tap the like button now, it would be great as I give you some important links. There's Alpha Spread to help you analyze the stocks. My members get a free version of that. That's how you become a member. That's my X. That's the all links for the birthday and Christmas card and a backup of the show and a backup newsletter. That's the extra channel which goes live 12 hours a day. And there's Discord, but Discord only works if you are a YouTube member and I manually upgrade you on a show or you subscribe to Discord. That's where you get all the free training from Ed Nevius for scalp trading. We provide it for free. What others on other YouTube channels do, they charge you for, we give you for free. Okay, let's see if we can get up to 100 likes. Are you ready? Here we go. 13 minutes to go before the presentation. Let's go. 110 watching. 110 watching. Scroll. 68. 5, 4, 3, 2, 1. 72. 72. Fantastic. Come on, guys. 100. YouTube will suggest it out and we'll start to move. In 5, 4, 3, 2, 1. Come on, let's get 100. 73. Okay, I'll leave it there for a minute because we've only got 108 watching, and we know our Indian audience are not signed into Google, so they can't like anyway. That's just, I don't know why that is. That's just the way it is. Never understood that. Never understood why. Okay, we're just waiting now. Let me have a quick sip of my latte. I hope, Zach, you can get registered as a registered charity. We got Zach in the house, Development Alert Uganda. One of our members has got a 1-year badge. He's been a member now for a year. I hope you can get sorted and be registered as a registered charity, because when I get to 10,000 subscribers, I'm going to do concerts for charities where they get all the money. It'll go directly to their charitable fund. There'll be no tax. There'll be no credit card fees. I won't charge a single penny. And it'll be a tax-deductible expense. This is a great, great, great thing. Everyone on my channel, I've got 28,000 subscribers. God knows why I haven't got 10,000 on my music channel. Just for that reason alone. I don't know why. I have no idea why. I'm ready to give literally millions of dollars to charity, but I want to do it with tax-free, tax-free for you to donate and no charges, and all I need is a few subscribers. It's very frustrating. I want to get on with it. So help me get on with it. Sort yourselves out. Smash the like button. Thank you, Zach. Awesome stuff. Right. Portfolio is rising exactly as we expected. We're making loads of money. No issue there. Let's get to 107,000. 107,000 would be another new all-time high. And that's what we want to see. 107,000. Market is holding strong. Yes, it is. Because money is going to switch from the Russell back into mega caps. Meta will be a good earnings. It won't be great, but it'll be good and positive. So will Amazon and Nvidia. Bloody hell. Nvidia is going to be great because all the other companies are reporting positive earnings and they're all spending money in Nvidia. So work that out. It doesn't take a rocket scientist to work out that Meta earnings is going to be good, does it? Really? Okay. Let's have a little look and see what the stocks are doing. We got 10 minutes to go before the meeting starts. We got Meta going up. No surprise there. What else have we got? Nvidia. Look at that. Is it a surprise? It shouldn't be a surprise. We told you that it would bounce off 100 and go to 200. And there it is. It's happening. We predicted it. We did it live on the show, unedited. And there it is. Hi, Zach. Did I just see the Queen is celebrating? Lovely to have you here, Queen. How are you? FFIE, rubbish. The worst stock you can own. FFIE, the worst stock you could possibly own. If you are an investor, you would not go anywhere near this. If you are a gambler or you are a cult follower of Omar and you follow people that are convicted gamblers and beg you for money when they make millions on YouTube and they get you to follow them because, you know, they can't pay their rent right now. I'm really struggling even though I've earned millions on YouTube. It's because they gamble their money away and people follow these people over a cliff for Faraday future. There's no value here whatsoever. It's rubbish, absolute trash. There's no value. It sells nothing. It doesn't do anything. But people pump it and go, well, it's up. It's up because you bought it. If I put outside my house a trash can full of poo and told everyone to buy it, I would have the most expensive poo in the world, right? Because everyone would buy it. I could promote it on my YouTube channel, dead easy. I've got some great poo for sale. Everyone buy it. Everyone buys it. It goes up in value. Is it still a load of poo? Correct. Is it still worth nothing? Correct. Stock price is irrelevant of the value of the company. Get it off the screen. It's absolute bloody rubbish. However, this is a business. This company actually makes money and actually holds cash, actually has customers. All right, so let's not talk about FFIE again on a proper show. All right, I'm not interested in that. Hi, Zach. The Queen is celebrating. Market is holding strong. Yes, it is. Noob here. What will be good for US dollar? Higher or lower actual? That's a very, very big question. And I don't. In what context are you asking me? Is it good for the US dollar to go up? Are you talking about imports, exports, trading forex, trading currency, which I never do. I think it's a waste of time. There's better things to do than just trying to make money out of trading currency. Buy a business, let the business go to work and earn you money. Opinions on Palantir. Palantir is a great, great business. Mr. Karp is an amazing CEO. However, he's a bit like Elon Musk. People, not himself directly, but people follow him like they follow Elon Musk. They overbuy the stock. It gets ahead of itself. It's a great business. It's got a great future. However, people buy it and overpay for the stock. So Palantir is great. I like Palantir, but it does draw attention from YouTubers who just want to bring in a crowd, like FFIE does and GameStop does, and Mullen and stuff like that. It brings in big audiences, makes them a lot of money, helps them buy their private jets like Meet Kevin. But Palantir isn't as good as the stock price. It's a good business. It's too expensive, however. I will not buy it, even though I do own it, of course, through the S&P. Amazon up to. Anyone has a thought? Amazon, a great business, going to do really well, and it's going to push money into, of course, Nvidia. Amazon, I own Amazon. I own about $6,000 worth of Amazon through the S&P. I think it's about that much. Apple is also a great business, up to date. Amazon's up to date. Very, very nice indeed. Boo, Nvidia. I only like double backflip binky bonk coin. Yeah, whatever you do, don't buy a great business with a great CEO and a great management and tons of money and a great innovative, proprietary, unique product. Don't do that. Buy Binky Bonk or buy a bankrupt business. Absolutely, do that. What about Soundhound? Soundhound, good business. I like it. Management's a bit flaky, but the business is good. It's got a good proprietary, unique product. I like Soundhound. I've talked about it a lot on the show and done lots of reviews on it. If you become a member, I can do a new review for you. This is the link to become a member of the channel. And on Sunday, Sensei will do you a chart as well. 5 minutes to go. So is Nvidia on the way up? Up now and goodbye or wait for pullback? No. You don't ever wait for a pullback on a great stock. It's too late now. You had the opportunity to buy it when it rotated. We made so many videos telling you exactly what was going on, that it would bounce on 100, and it did. This is what we did. We literally put out these videos in real time, live in the show. We don't edit videos, we do them live. And we have our analysts call in. Sensei called in. This was the moment here. This was is now my biggest ever video on the channel. 100 times my normal views. Went crazy. 12,000 views in the first day. This is my biggest ever video. And we talked about the crash or the bounce, and we said it would bounce off 100, and then people were confused exactly what to do. So we gave you this here. Here's a chart here telling you all the ins and outs and the buy zones and the sell zones of Nvidia. And we talked about the noise that you're getting from other channels and what's true and what's not, what's about selling videos and what's actually trying to help you, and so on and so forth. So I strongly recommend you go and watch that. What will it earn me? About 1 cent per person that watches it. So it's not about me making any money. I'm not that big enough a YouTuber. It's not about that. It's about helping people, right? Nvidia, great business, going to $200. 100%. 100%. We have two ways of looking at the stocks. We have the fundamentals. I study the fundamentals. I make friends from the companies. I meet the CEOs. I discuss with the CEOs live on the show. We do that. You've seen my Meet the CEO series. I have CEOs and people that work at companies follow me on X, Instagram, and so on and so forth. Or I speak to on the phone here. You can hear it going on behind the scenes in the extra channel in between the shows. That goes on. So I know what's going on at the companies. I also understand the... Hang on a minute. Oh, no, that's fine. I also understand the fundamentals. Sensei, however, he's into the charts. So you put the two together and you get a very accurate prediction of 110 bounce, and it did. And now it's going to $200. 100%. Right. This is not financial advice, though, okay? This is just my experience of what I'm doing for myself. Get well soon, Queen. Is Queen not well? I missed it. What's going on? Get well soon, Queen. Get well soon. Get well. What's going on? What's your thoughts on REE? I haven't done a review for a while on it. I'd need to do it again. I bought Nvidia yesterday at 103. Congratulations, you own a good business. Microsoft also almost completely recovered now. Yeah, no surprise there. Please, thoughts on ASTI. I need an update from the CEO, Paul Worley. 4 minutes until he speaks. 2 minutes now. 3 minutes, 2 minutes. What about C4 Therapeutics? I haven't reviewed. If you want me to review it, I would need you to be a member, and then I can do a full review and news and so on. Cover the earnings for you as well. I am okay. It's my mum who is sick. I am very, very sorry. The Queen is self-braiding. I'm very, very sorry to hear your mum is not very well. We all send our love to you. Hey, Martyn, by your logic, Saf Khan, hey, Martyn, by your logic, I own 0.0000008 of the USA because I have 100 in my pocket. Not really sure I know what you mean. Are you talking about the GDP? Are you talking about the gross domestic product? Are you talking about how much gold that's in the Federal Reserve and how much money you have? I'm not really sure I understand that. Do you know anything about KULR Technologies? I think I've reviewed it once. 1.5 minutes to go. If you want to find out if I've ever reviewed a stock or what I think about it, go into YouTube, type Martyn Lucas Investor, followed by the ticker symbol. So KULR stock. I rank #1 for about 30 different stocks. #1 on Google and YouTube. So I come up as #1 in the search for about 20 different stocks. I don't know about KULR, but if you do it, you'll find it on my channel if it exists. Thank you all. Get well soon, Queen's mum. Absolutely right, all of us. Okay, here we go. We're going to go over now to the Fed, Jerome Powell, for the presentation. So we need 100 likes before we do. We have now got 86. I want 40. I want 14 more likes. Tap the like button. We're going to go over to Jerome Powell in 30 seconds. Come on, we've got 86. 86. Fed Jerome Powell in 30 seconds. That's when the fun and game starts. 86. 85. I've lost one. Someone doesn't like it. Fair enough. Don't like it anymore then. 86. No, 86. Okay, we're not going to go up. I don't want to waste any more time. I want to get straight into Fed Jerome Powell. Here we go. So, here we go. It's showtime, everybody. We're going to... oh, hello. That looked quite good. What happened there? How many likes did I get then? That was a good number of likes. All flew in at once. 86. 86 is now 93. Oh, 7 away. And we would have got suggested on YouTube. Whoa, look at the subscribers. Bloody hell. What are the views like today? What are the views like? 33,500 views over the last 48 hours, but nearly all of that is the last 12 hours. Absolutely brilliant. Okay, let's go. Let's go. Here we go.
The market has come into better balance, and the unemployment rate remains low. Inflation has eased substantially from a peak of 7% to 2.5%. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. We are attentive to risks on both sides of our dual mandate, and I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP growth moderated to 2.1% in the first half of the year, and down from 3.1% last year. Private domestic final purchases, or PDFP, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal of underlying demand, grew at a 2.6% pace over that same period, the first half. Growth of consumer spending has slowed from last year's robust pace, but remains solid. Investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment stalled in the second quarter after a strong rise in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 177,000 jobs per month in the second quarter, a solid pace, but below that seen in the first quarter. The unemployment rate has moved up, but remains low at 4.1%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years, and a strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market have returned to about where they stood on the eve of the pandemic, strong but not overheated. Inflation has eased notably over the past 2 years, but remains somewhat above our longer-run goal of 2%. Total PCE prices rose 2.5% over the 12 months ending in June. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As the labor market has cooled and inflation has declined, the risks to achieving our employment and inflation goals continue to move into better balance. Indeed, we're attentive to the risks to both sides of our dual mandate. We have stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. The second quarter's inflation readings have added to our confidence, and more good data would further strengthen that confidence. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the longer run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Gina. Gina Smilik from the New York Times. Thanks for taking our questions. Markets pretty much entirely expect a rate cut in September at this stage. I wonder if you think that's a reasonable expectation, and if so, why not just make the move today?
Thank you. So on September, let me say this. We have made no decisions about future meetings, and that includes the September meeting. The broad sense of the committee is that the economy is moving closer to the point at which it will be appropriate to reduce our policy rate. In that, we will be data dependent, but not data point dependent. So it will not be a question of responding specifically to one or two data releases. The question will be whether the totality of the data, the evolving outlook, and the balance of risks are consistent with rising confidence on inflation and maintaining a solid labor market. If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September. So you asked why not today, and I would just say, again, that the broad sense of the committee is that we're getting closer to the point at which it will be appropriate to reduce our policy rate, but that we're not quite at that point yet.
Howard.
So just to follow up on that a bit, if inflation behaves as you expect between now and September, would you regard a cut in September as sort of the baseline scenario right now?
So I guess I would think about it this way. I'll give an example of cases in which it would be appropriate to cut and maybe that it wouldn't be appropriate to cut. So if we were to see, for example, inflation moving down quickly or more or less in line with expectations, growth remains, let's say, reasonably strong, and the labor market remains, consistent with its current condition, then
Rates
I would
are coming
think
down.
that a
He just doesn't
rate
want to say
cut
it.
could be on the table at the
Read between
September
the
meeting.
lines.
If
is how it
inflation
works.
were to prove, stickier, and we were to see
Can't
higher
be
readings for
proactive.
inflation,
Can't be
disappointing
reactive. It has to be
readings,
proactive.
we would weigh that along with the other things. I think
already
it's going to be
decided.
not just any one thing. It's going to be the inflation data. It's going to be the employment data. It's going to be the balance of risks as we see it. It's going to be the totality of all of that help us make this decision.
And just to follow up on that, specifically, in what ways right now, given all you've seen over the last few months in particular on shelter, on services, et cetera, in what ways are you not confident right now that inflation is on the way back to 2%?
I think it's just a question of seeing more good data. We have seen the last couple of readings have certainly added to confidence, and we've seen progress across all three categories of core. Have seen the last couple of readings have certainly added to confidence, and we've seen progress across all three categories of core PCE inflation. That's goods, non-housing services, and housing services. So it's really just, we had a quarter of poor inflation data at the beginning of the year. Then we saw some more good inflation data. We had 7 months at the end of last year. We just want to see more and gain confidence. And as I said, we did gain confidence, and more good data would cause us to gain more confidence.
Colby.
Thank you. Colby Smith with the Financial Times. The March SEP pointed to 3 cuts in 2024 with core inflation at 2.6% and the unemployment rate at 4%. Since we're now at that level in terms of inflation and already beyond what was projected for the labor market, I'm just wondering if that rate path is back to being the best guidepost for policy rather than, let's say, the shallower one laid out in the June SEP.
So I would just say, really the path ahead is going to depend on the way the economy evolves. And I can't really give you any better forward guidance on it than that. We didn't, of course, do an SEP at this meeting. We will do another one at the September meeting. I would just say I can imagine a scenario in which there would be everywhere from 0 cuts to several cuts, depending on the way the economy evolves. And I wouldn't want to lay out a baseline path for you there today. I've said what I can say about September and about today, though.
Nick Timmeros of the Wall Street Journal. Chair Powell, you've said before that you wouldn't wait until inflation got to 2% to cut rates because of how inflation has lagged. Does that apply for the labor market too? If the labor
107
market,
is an all-time
is back
high.
in
Get ready for a big cheer.
I've
never hit 107 before.
Given the
All-time
high
high approaching.
Warranted right now.
So this is the very reason that we're thinking about that we've said in our statement that we're going back to looking at both mandates and that we think the risks are coming back into balance. We think what the data broadly show in the labor market is an ongoing gradual normalization of labor market conditions, and that's what we want to see. We've seen that over a period of a couple of years, and a move really from overheated conditions to more normal conditions. We are watching the labor market conditions quite closely, and that's what we're seeing. If we start to see something that looks to be more than that, then we're well positioned to respond. That's part of what we're thinking.
And when you talk about seeing something that's more than whatever softness or slowdown you expect, in the past you've said that stronger growth wouldn't override better news on inflation. I wonder how that cuts the other way. If you're seeing more softness in the labor market than what you would expect, does that change the calculus on what you're looking for out of the inflation numbers to recalibrate policy?
So we have growth isn't one of our three. We have two mandates, as you know. The labor market, maximum employment is one, and stable prices is another. So we weigh those two things equally under the law. When we were far away from our inflation mandate, we had to focus on that. Now we're back to a closer to even focus. So we'll be looking at labor market conditions and asking whether we're getting what we're seeing. And as I said, we're prepared to respond if we see it that it's not what we wanted to see, which was a gradual normalization of conditions. If we see more than that, and it wouldn't be any one statistic, although of course the unemployment rate is generally thought to be a good single statistic, but we'd be looking at wages, we'd be looking at participation, we'd be looking at all the things, surveys, quits, hires, all of those things to determine the overall status of the labor market. But we're looking at it now. I would say, again, I think you're back to conditions that are close to 2019 conditions, and that was not an inflationary economy. Broadly similar labor markets then. I think core inflation was actually running below 2%. So I don't now think of the labor market in its current state as a likely source of significant inflationary pressures. So I would not like to see material further cooling in the labor market, and that's part of what's behind our thinking. The other part, of course, is that we have made real progress on inflation, and we've got growing confidence there that we are not quite there yet, but we're getting more confident that we're on a sustainable path down to 2%. So those two things are working together, and we're factoring those both into our policy.
Chris.
Chris Rugaber at Associated Press. You mentioned not wanting to see any further cooling in the job market. Why not? Or would you consider preemptive cuts to prevent if you saw risks of an unexpected cooling? Is that something you would cut ahead of time for?
So I wouldn't say I wouldn't want to see any other cooling. It would be more of a material difference.
I'm nearly there.
We'd be looking at this, and if we see something
I've
that
never
looks like
seen
a more significant
107,000.
downturn,
This is
that would
my
be
real
something that
money,
we
all from $5,000.
Intention of
Live on the
responding
show
to.
in front of everybody.
So in terms of, I don't think of it that way. I think of it as, we're actually in a good place here. We're balancing these two risks of, go too soon and you undermine progress on inflation, wait too long or don't go fast enough, and you put at risk the recovery. And so we have to balance those two things. That's the nature of having two mandates, and I think this is how we balance them. It's a rough balance, but it does feel like that. Again, the labor market feels like it's in a place where it's just a process of ongoing normalization. 4.1% unemployment is still historically low, and we'll just have to see what the data show us.
And just to follow quickly, wanted to see what you thought of the recent JOLTS report, which did show gross hiring has come down even below 2019 levels. Layoffs remain low. So it painted a picture of a very static labor market. Is that sustainable in your view, or something that is worrying?
All from $5,000, folks.
Continue to point to kind of the direction we would want to see. So that was taken as there was a decline in job openings. That was good.
3 years.
ECI reading was a little softer than expected. So that's
just hard work,
good reading. It
discipline.
shows that wage increases are still at a strong level, but that level continues to come down to more sustainable levels over time. That's exactly the pattern that we want to be seeing. So I think the data we've been seeing in the labor market are broadly consistent with that normalization process. Again, we're closely monitoring to see whether it starts to show signs that it's more than that.
Steve.
Steve Leisman, CNBC. Mr. Chairman, back in March, you talked about cutting rates as a process, and in June, you talked about the idea that, well, one rate cut wouldn't do anything. So I wonder if you can sort of follow up on Colby's question. Talk about, are you weighing the economy right now in terms of its ability to withstand multiple rate cuts?
Absolutely
Talk
great.
us through the process that you think,
Smashed
or is
it.
it just one rate cut? Or are you in the process now of thinking that rates need to be normalized here? Thank you.
Yeah, I can't really say that, honestly. We've seen, significant movement in the labor market. And, we're very mindful of this question of is it just normalization or is it more? We think it's just more normalization, but we want to be in a position to support the labor market. At the same time, we're seeing progress on inflation. So, we actually got to this. We raised rates a year ago at the July meeting. And if you look at the situation in the economy a year ago, inflation was over 4%. It was a completely different economy. Now we've made a lot of progress, and the labor market, unemployment was in the threes, mid threes. So it's a different economy, and I think it's coming to be time to adjust that so that we support this continued process. The thing we're trying to do is, that we have, we've had this really significant decline in inflation, and unemployment has remained low. And this is a really unusual and historically
anyone can do the same thing.
Unusual
it's not hard.
And such a welcome
it's easy
outcome
to make
for the
money.
people we serve.
Hard part is to
what
keep
we're
it.
thinking about all the time is how do we keep this going? And this is part of that. We think we don't need to be 100% focused on inflation because of the progress we've made. 12-month headline at 2.5, core at 2.6. It's way down from where it was. The job is not done on inflation, but nonetheless, we can afford to begin to dial back the restriction in our policy rate. And I think we're just as part of a process. In terms of what that looks like, I think most you would think in a base case that policy rates would move down from here, but I don't want to try to give specific forward guidance
Sod it.
about when
Let's
that
make
might
it 108.
be, the pace at which it might happen.
I said it would go to
I think that's
110
really
today
gonna depend
anyway,
on the
didn't I?
economy, and that's highly uncertain.
Rachel.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. On inflation, do the past few months of good reports look like what we saw last year, where you really had a lot of momentum with a few bumps in between? Would you characterize that kind of momentum as back on track at this point in the year?
Actually, what we're seeing now is a little better than what we saw last year. Last year, as we pointed out late in the year,
some good news for you.
A whole lot of the progress we saw last year was from goods prices, which were going
some
down
good
at an
news?
unsustainable rate.
You want some good news?
Disinflating at an unsustainable rate. This is a broader disinflation. This has goods prices coming down, but we're also now seeing progress in the other two big categories, non-housing services and housing services. So, so the thing is, you got 1 quarter of that. We had 7 months of low inflation. You got 1 quarter of this. I would say the quality of this is higher, and it's good, but so far it's only a quarter. So I think we need to see more to know that we're, to have more confidence that we're on a good path down to 2%. But as I mentioned, our confidence is growing because we've been getting good data. And things like the ECI report and, frankly, the softening in the labor market conditions, give you more confidence that the economy's not overheating. It doesn't look like an overheating economy. And it looks like an economy that's normalizing.
Okay. And if we were to think about the first couple of months of the year, is there any sense now that they were these blips that could have actually allowed for earlier rate cuts, as were some of the projections going into 2024?
So the thing about if what it is seasonality, and it could just be, it's very, very hard to do appropriate seasonal adjustments. If that's what it is, then that actually implies that other months we're reporting too low inflation. If you smoothed it out, it's a zero-sum game. And that's why we look at 12 months. We look at 12 months because that takes all that out, all those effects out. 12-month now is 2.5% headline.
He's just told you we are at 2%.
This is so much better than where we were.
Which we know in Europe and we know in the UK.
Now,
we're
the
already there.
This
is politics now, just waiting.
Inflation
the rates are already coming down.
But we need to take note of that progress.
It'll be 0.5% in September.
And we need to weigh the risks to the labor market and the risks to our inflation target now more equally than we did a year ago.
Read between the lines, folks.
Michael McKee from Bloomberg Radio and Television. I'd like to ask you about the balance of risks as the American people see it. At this point, is the risk greater to leave interest rates where they are, given the damage that higher interest rates do to the economy in slowing demand and raising prices? Or is it more important for the American people that you keep rates where they are to bring
interest rates do
down?
not raise prices? That was incorrect. They reduce prices.
I think that we've been given an assignment by Congress. This is how we serve the American people, is by achieving maximum employment and price stability, right?
Yes.
And so in our
it doesn't rise prices, that was rubbish.
Quasi-constitutional document, the Statement of Longer Run Goals and Monetary Policy Strategy, we look at the two goals, and if one of them is farther away than the other, the two variables, inflation and employment, if one is farther away from its goal than the other, then you concentrate on the one that's farther away, and you take account of the time to reach the goal. So for the last couple of years, the best service we could do to the American people was to focus on inflation. But as inflation has come down, and I think the upside risks
Bank of
to
England
inflation have
should
decreased as the labor market has cooled off.
Two banks have already reduced their mortgages.
And labor market has softened.
But they follow the US.
Probably
Europe
the
inflation
is probably a little farther from its target than is the employment, but I think the downside risks to the employment mandate are real now. So we have to weigh all that. And if you think about where that takes us, is we have a restrictive policy rate. It's clearly restrictive. It's been the rate we've had in place for a full year. And the time is coming, as other central banks around the world are facing the same question, the time is coming at which it will begin to be appropriate to dial back that level of restrictions so that we may address both mandates.
Well, you have event risk, basically, with the jobs report on Friday and another one before you meet again. Are you certain that you won't fall behind the curve and lead to unnecessary unemployment if you wait until September?
Certainty is not a word that we have in our business. So we get a lot of data between now and September, and it isn't going to be one data read or even two. It's going to be the totality of the data, all of the data, and not just and then how is that affecting the outlook and how is it affecting the balance of risks? That's going to be the assessment that we do. Of course, we'll all look carefully at the employment report, but so much other data coming in and so much happening between now and the September meeting, and we'll make a judgment.
Edward. Thank you, Mr. Chairman. Edward Lawrence of Fox Business. I do want to dig deeper on what Michael and what Nick were asking. There's a shift in the statement to balance between the focus between inflation and jobs. Looking at the job sides, we've seen wage data show sort of an abrupt slowing. We're hearing on earnings calls from companies like Intel abrupt layoffs. In the jobs report from the BLS, government jobs has been a leading creator. Could the government jobs as a sector hiring mask underlying weakness in the jobs report?
Well, we'll look at everything. We've seen some tendency to have a narrowing base of job creation in some months going back, but then we've had some months where job creation was broader, and also the headline number of jobs has come down. So but you look at the whole thing, and I think you do look at private demand extra carefully. To your point about government. So we'll just be looking at all those things.
So as a follow then, so could the Fed then be behind the curve? Because you said some of the reports in the last meeting, you said the reports could be noisy or overstated. Was there a discussion of what kind of discussion was there for a cut today? And could the Fed be behind the curve?
Yeah, so
JC, I'll answer that in a moment.
Look, the objective is to balance the two risks, right? It's the risk of going too soon and the risk of going too late. We've been, we had 7 months of good inflation data at the end of last year. We said we wanted to see more. We pointed out that too much of this was coming from goods, and sure enough, the first quarter wasn't great inflation data. Now we've got a quarter that is good, and we're balancing the risk of going too soon against the risk of going too late. That's what we're doing. There's no guarantee in this. It's a very difficult judgment call, but this is how we're making it. But in terms of today, your question about today, we did have we had a nice conversation about this issue today. The overall sense of the committee, as I mentioned, is that we're getting closer to the point at which it'll be appropriate to begin to dial back restriction, but we're not quite at that point yet. We want to see more good data. The decision was unanimous. All 19 participants supported it. But there was a real discussion back and forth of what the case would be for moving at this meeting. A strong majority supported not moving at this meeting. That was the strong sense of the committee. But it's a conversation that we had today, certainly.
Courtney. Courtney Brown from Axios. Thank you for taking our questions. When the Fed was raising rates, there was a lot of conversation about long and variable lags. I wonder if that applies on the way down too. How are you and the committee thinking about that?
Yes, it does. And I think the lags have kind of showed up here in the last 6 months, by the way. You really do now see the restriction, whereas, even a few months ago, people were questioning how restrictive policy was. Look at the labor market now. You can see, and look at rate-sensitive, interest-sensitive spending. You really do see now that policy is restrictive. I wouldn't say it's extremely restrictive, but it's certainly effectively restrictive. Yes, the lag should be on the way down. It should take some time to get into the full economy, affect financial conditions, and that affects economic activity, hiring, and that kind of thing, and ultimately inflation. It's not instantaneous, although it's faster than it used to be because markets move now in anticipation of our moves.
So are you worried then that if monetary policy acts with long and variable lags, even when you're lowering interest rates, it might be too late for the Fed to help stave off any kind of slowdown in the labor market or broader economy?
Yeah, we have to worry about that. Just to make it clear, it's a very difficult, challenging judgment, and we don't want to go too soon. We don't want to go too late. But this is how we've made that judgment. I feel good about where we are. We're certainly very well positioned to respond to weakness with the policy rate at 5.3%. We certainly have a lot of room to respond if we were to see weakness. That's not what we're seeing, though. What we're seeing, look at the first half growth numbers. Look at PDFP at 2.6% for the first half. It's not signaling a weak economy. It's also not signaling an overheating economy. Labor market, admittedly, the unemployment rate has moved up 0.7, and we're seeing normalization there. But wage increases are still at a high level. Unemployment is still at a low level. Layoffs are very low. Initial claims have moved up, but they're pretty stable, and they're historically not high at all. So the total scope of the data suggests a normalizing labor market. And again, we are carefully watching to see that continues to be the case.
Victoria.
Hi, Victoria Guido with Politico. On the labor market, I was wondering, how worried are you all about unemployment rising to the point where it triggers the SOM rule? And would that potentially affect how quickly you cut rates?
So I would just say the question
Stick
really
to the
is,
end. I've
is
got some really exciting news if you are a fan of this show.
So
really exciting
we're watching
news.
really carefully for that. We're aware of that rule, which is really I would call it a statistical.
We have the highest engagement rate
a statistical
of anyone
thing that has happened.
Any channel covering
history.
this report right now, including the BBC, FOMC,
is what I'd call it.
Federal Reserve. I'll show you in a minute.
Economic rule where
Wait for the end. I'll show you.
Must happen.
Very proud of this.
So, again, what do we see? What are our eyes telling us? We look at all the things we're seeing. And what it looks like is a normalizing labor market. Again, job creation at a pretty decent level, wages moving up at a strong level, but coming down gradually. Job vacancies have come down, but they're still high by historical standards. So, I've been through some of the data already, but what we think we're seeing is a normalizing labor market. And we're watching carefully to see if it turns out to be more. It starts to show signs that it's more than that. Then we're well positioned to respond.
Is there reason to think that the labor market might behave differently this time than it has historically?
I think, history doesn't repeat itself. It rhymes. I think that statement is very true about the economy. You never assume it's going to be just the same. An example would be, is there a trend increase in the level of vacancies? There are many, many examples. So it's never exactly the same. Also, let's remember that this pandemic era has been one in which so many, apparent rules have been flouted, like the inverted yield curve, for starters. So many pieces of received wisdom just haven't worked, and it's because the situation really is unusual or unique in that so much of this inflation came from the shutdown of the economy and the resulting supply problems in the face of, admittedly, very strong demand. So the whole situation is not the same as many of the other prior inflation or downturns that we've seen, or business cycles that we've seen. So we're having to learn, we're having to, to be very careful about the judgments that we make, I would say. So we don't assume that these regularities will just repeat themselves automatically.
Amara. Thank you, Chair Powell. I'm Mara Mokwe with Bloomberg. There seems to be quite a difference between what the anecdotal data are telling us, such as the very recent downbeat beige book, and the hard data. Do you take those anecdotes seriously? That is, that the economy and labor market are cooling much more rapidly than what's shown in the data?
So I do take that seriously, and the beige book is great. What's even greater is hearing the Reserve Bank presidents come in and talk about their conversations with businesses and business leaders and workers and people in the nonprofit sector in their districts. But I'll tell you, it's a pretty, the picture is not one of a slowing or, a really bad economy. It's one of, there are spots of weakness, and there are regions where growth is stronger than other regions. But overall, it's, again, look at the aggregate data. Aggregate data is, particularly PDFP, private domestic final purchases, is 2.6%, and that's a good indicator of private demand. So we listen to all of that, and it does. I think it's important to listen to anecdotal data and not just look at the aggregate data. Especially, it's very hard. GDP data can be volatile quarter to quarter. So it's just hard to measure economic activity. There are it's just difficult to do. So I look at both. But I wouldn't say that the anecdotal data is uniformly downbeat. It's more mixed.
Thank you. Jolene Kent with CBS News. Chair Powell, thanks for taking our questions today. You have consistently said that the Fed does not consider politics in making decisions. With a possible September rate cut on the table, it would be less than 2 months before the election, and former President Trump reportedly said that cutting rates so close to the election is something the central bank knows they shouldn't be doing. What's your response, and do you believe it's possible to really remain apolitical with a September rate cut?
I absolutely do, and I think it's, first of all, we haven't made any decisions. I would say it this way. Haven't made any decision about any future meeting. I don't know what the data will reveal or how that will affect the appropriate path of our policy. I really don't know. I do know how we will make that assessment. That's what I do know. So if you take a step back, the current situation, again, is inflation has come down much closer to our goal, and that's happened while unemployment has remained low. We're very tightly focused on using our tools to try to foster that state of affairs continuing. That's at each of our meetings and all of our decisions, our focus is strictly on that and really on nothing else, doing our part, whatever that part may be. We're using our best thinking. We're doing our best to understand the economy. We follow academics. We follow the many commentators who bless us with their commentary. But we don't change anything in our approach to address other factors like the political calendar. Congress has, we believe, ordered us to conduct our business in a non-political way at all times, not just some of the time. I'll say this too. We never use our tools to support or oppose a political party, a politician, or any political outcome. The bottom line is, if we do our very best to do our part and we stick to our part, that will benefit all Americans. If we get it right, the economy will be stronger, we'll have price stability, people will find jobs, wages will rise in real terms, everyone will benefit. So that's what we believe, and that's how we will always act. This is my 4th presidential election at the Fed. I can tell you this is how we think about it. This is what we do. So anything that we do before, during, or after the election will be based on the data, the outlook, and the balance of risks, and not on anything else.
Just a quick follow-up. Do your economic forecasts and models take into account the two very different economic plans of these two presidential candidates, Harris and Trump? And if so, how?
No, we do not do that. We absolutely do not do that. We don't know who's going to win. We don't know what they're going to do. We don't act as though we know, and we just can't do that. You know, we basically have our forecast. We can run simulations of different potential policies, but we would never try to make policy decisions based on the outcome of an election that hasn't happened yet. That would just be a line we would never cross. You know, we're a non-political agency. We don't want to be involved in politics in any way, so we wouldn't do that.
Nicholas.
Thank you, Chair Powell. Nicholas Jasinski from Barron's Magazine. There hasn't been a dissenting vote on an interest rate decision in some time. If the data do evolve as you expect, if you do have more confidence by the September meeting, do you get the sense that there will be a unanimous vote on an interest rate move in September? Or basically, are there meaningful differences in committee members' assessments of how much more confidence is needed?
So there are always meaningful differences. There are, and you know, we talk a lot before, during, and after the meeting. We do have a very robust discussion of these things. You're right that in most cases, people, if they feel heard and they feel that their position has been given serious consideration, for most people, most of the time, that's going to be enough. There are dissents. That's fine. You know, no one has a veto. No single person has a veto. So it just is a question of who will vote for and against. We've had dissents. We haven't had so many during the pandemic era, and it just may be that we felt more united because we felt under a lot of pressure to get things right. But before the pandemic, we had plenty of dissents, and dissents happen. It's part of the process. There's nothing wrong with dissents, and if it happens, it happens.
Jean.
Hello, Jean Young with M&I Market News. Is a 50 basis point cut as a first cut at all likely or even on the table? Thank you.
I don't want to say, I don't want to be really specific about what we're going to do, but that's not something we're thinking about right now.
Jennifer.
Of course, I haven't made any decisions at all as of today.
Thank you, Chair Bell. Jennifer Schonberger with Yahoo Finance. Not to get into the minutes, but you said there was a real discussion today for moving at this meeting. I'm curious if you could provide some more color on the nature of the discussion today at the meeting about a possible rate cut as early as September.
Well, so, the way the meeting is set up, the first day there's a discussion of financial stability because it's every other meeting we have that. And then we have an opportunity to comment on that. Then we have an economic go-around. And then this morning we have the monetary policy go-around. And I think in people's economic go-around and in their monetary policy go-around, people express their views about this. And there's a range of views. People, as you will know from the speeches that they give, people have different ways of thinking about the economy. And so in the minutes, we'll lay this out in a much better way than I can do off the cuff. But there's a range of perspectives, and but I do think that we're a consensus-driven organization. People come together. This was a unanimous decision, and at the end, everyone supported the outcome, not just the voters, but everyone. So I would also say some people examined the possibility, the case for moving at this meeting, but overwhelmingly the sense of the committee was not at this meeting, but as soon as the next meeting, depending on how the data come in.
But there is a growing sense of confidence that you could move at the next meeting, assuming
Yes.
inflation comes.
Well, assuming that the totality of the data supports such an outcome, no question. That is the case. That, as I mentioned, we think that the time is it's approaching. And if we do get the data that we hope we get, then a reduction in our policy rate could be on the table at the September meeting.
He just didn't want to pull Volcker. He just didn't want to react to what's been going on. He wants to do it on his own time.
Hi, Chair Powell, Nancy Marshall-Genzer with Marketplace. Former New York President Bill Dudley wrote an op-ed in Bloomberg earlier this month, which you probably saw, in which he said, quote, "It might already be too late to fend off a recession by cutting rates. Dawdling now unnecessarily increases the risk." Is he wrong?
So this is the judgment that we have to make, and we're well aware of the judgment. We're as I've said, we have to weigh the risk of going too soon against the risk of going too late. If we go too soon, we can, we had a lot of advice, to go ahead and cut after the 7 good months of last year. We didn't. We said we needed to see more. Then we saw some higher inflation. We've seen 1 quarter of good inflation, and we've seen the labor market move quite a bit. And as I mentioned, I don't think it needs to, cool off any more for us to get the inflation results that are related to the labor market. Not all inflation is, of course. So I think it's a difficult judgment to make, and what you see is the judgment of the committee is that that time is drawing near. That time could be in September, if the data support that.
And have the chances of a hard landing increased?
So I don't know whether they've increased. I think they're low. I think this is, you don't see any reason to think that this economy is either overheating or sharply weakening. That's just not in the data right now. What's in the data right now is an economy that's growing at a solid pace, a labor market that has cooled off, but nonetheless, unemployment is low. The data overall show a strong labor market, so that's really what you see. It's neither an overheating economy nor is it a sharply weakening economy. It's kind of what you would want to see, but of course, the job is never done. We're watching to see. Which way the economy heads, and I think if we are to respond to weakness, we're certainly, well equipped to do that. But that's not what we're seeing. What we're seeing is strong economic activity and a good labor market and inflation coming down.
Greg.
Thank you so much. In the minutes of the June meeting that came out a few weeks ago, there was a discussion about communications, and some Fed officials said maybe the Fed wasn't as clear enough about its reaction function. And when I talk to the commentators who bless you with their comments, they say that they really don't have a sense of what is going to judge, maybe not the first cut, but the pace of the cuts going forward. They don't have a good sense of that. Is there anything you can say, like, how will we judge that?
I think the reality is that forecasters, and this isn't just the Fed by any means, forecasters have been continually surprised by, for example, the strength of the economy last year. So I think we have to be pretty humble about giving forward guidance about this, that, and the other thing. We need to be pretty careful about that. And when you're saying you're going to be data-driven, of course, it's always what the data, how they affect the outlook and the balance of risks, but nobody has great vision deep into the future. In terms of a reaction function, that's a long time discussion that people have had forever. I think people have understood for a long time, actually, that we were very focused on bringing down inflation. Nobody was really confused about that. The data have, again, you've seen significant improvement in inflation just for the last quarter. Markets move around on the data, really, not so much. It's not really what we're going to do. It's more just that the data keep coming in, and markets are very, very responsive to that data right now.
Go to Jeff for the last question.
Meta earnings, we're covering it
Thank you,
tonight.
Mr. Chairman.
Join us, don't go
I'm
anywhere.
going to change gears on you just a little bit from all of the rate
This is
talk and
huge.
whatnot.
Amazon tomorrow,
With Fed
and then
now
Nvidia.
being in the books for a little over a year, there hasn't been a whole lot of talk
Hello,
about central
Omran.
bank digital currency, and wondering if you could give us an update on where things are with that. Is that considered a dead issue now? Is it still something that's being discussed within the committee, and what's happening with that?
It's not something that comes up at all in the FOMC. So more broadly, digital finance is an area that has really significant implications for payments generally, instant payments, and it's something that's going to really change the way it's going to make more efficient and hopefully safer and all those things the way payments are made around the world. And so we have people who are researching that and trying to keep up to speed because we play an important role in the payments sector, both as a convener and as an operator too. In terms of a CBDC, there's really nothing new going on. There's not much going on at all. We don't have the authority to issue a retail CBDC that's available to the public. We're not seeking that authority. So what we're doing is keeping up with developments there. Pretty much every major central bank in the world is at least doing that. Some of them are actually seriously looking at implementing a CBDC. We're really not. We're really just evaluating, the story and what's happening out there. I think it's work that we need to be doing which could be very beneficial down the road. But we don't have on a CBDC. We don't have any plan. We would need to go to Congress, and we have no plan to do that. No one here has decided that we think it's a good idea yet. Thank you.
All right.
The July Federal
There
Reserve
we
News
go.
Conference
Let's
with Chairman
come back
Powell.
to
If you
here.
are just
Thank
tuning
you
in,
very much indeed. Right. Let's do a few things. We've got a very, very big night ahead of us now. We've got Meta, we've got Amazon, we've got Chevron, we've got oil, we've got Nvidia earnings coming out. This is absolutely fantastic. So let me do everything for you right now. So we've got a rate pause, exactly as we said. No surprise. There's a rate cut coming in September. I've said it now for 18 months. The summer of 2024, rate cuts is going to happen, 100%. So let's talk about this. We've just hit another all-time high. We went through 107,000. We just dropped slightly after that, but that doesn't concern me at all. I'm not selling anything. I'm not buying anything. I'm already massively in margin. That's why my portfolio is amplified. If you look at the S&P, it's up 1.79. I am up over 3%. So basically, I've doubled the market. I've doubled, beaten the market by double. That's because I'm massively in margin at the moment, and I'm going to remain in margin until I just pay it off. I'm not going to sell a single share. I'm going to earn about $200 a month on dividends. $600 a quarter, and I'm trying to get that to $1,000 a month. That is the aim. Now then, do we have any questions? What we're going to do now, because it ran slightly later, there's not a closing bell. We're going to go directly to Meta earnings, right? Meta earnings will be out in about half an hour. The Meta earnings will be out in half an hour. We want to be there live. We want to be the first there to cover it. Absolutely right. Providing you all the information. So we don't want to miss that. Now, I just wanted to share something with you. So stay right where you are, and we're going to go directly to the Meta earnings, okay? What I want to show you here, for those of you that are fans of the show, you will find this interesting. We had, I'll share with you. Let me share with you here. We had, so far, 868 people through our stream. Okay, we're only a small channel, 28,000 subscribers, 120 at the moment. We just a few now are just dropping off. That's expected. And I want to share with you how YouTube measure engagement. So the amount of views compared to your subscribers, that's one measure of engagement. We have, right now, the highest engagement of any channel in the world. Right now, and we're looking at the biggest. So the percentage of live viewers to subscribers. Look at this. There's 19,000 watching out of 2.8 million on CNBC. we have a higher percentage. 1,500 on CNBC Channel 18. They've got nearly 3 million subscribers. 24 watching there, they have 321,000 subscribers. 14,000 watching, 2 million subscribers. This goes on and on and on. And I wanted to show you that because we actually have, if you do the percentage-wise, the highest engagement rate. And as I was watching, I went down about 30 channels and I thought, bloody hell, we have, percentage-wise of viewers, the higher engagement rate. How cool is that? More percentage-wise of our viewers decided to watch. You're not going to have as many as a channel with 2 million subscribers or 10 million subscribers, obviously, right? But if you can do percentage-wise, then that is a major result. So thank you to all of you for making us today the preferred choice, percentage-wise, of our subscribers, so engagement rate of any channel on earth. Very, very proud of that. Fantastic. Keep on going. I'm loving it. Right. That's that. I just wanted to share that with you just because it's exciting, right? Okay. Now, what we're going to do now is we're going to go straight over to the Meta earnings. So let me show you how we're going to do that right now. You don't have to go anywhere. Stay right where you are. This is the Meta earnings. We're going to be live here covering the earnings. The earnings report is going to be out in a few minutes. We don't want to miss it. We want to see this, see how it reacts, learn more about the economy going forward. This will tell us how Nvidia are going to do, and that is a major part of my portfolio. Right, here is the Meta earnings, META. There you go, Meta. I'll put it in the chat right now. Well done, Martin. Bruno, thank you very much, Bruno. Thank you for being part of the family. Everyone here, it's because 98% of our live viewers are members. It's more than any other channel on earth, even more than Mr. Beast. 98% of our live viewers are members, and that's what it's all about. They watch all day, every day, and that's why hopefully we'll become the biggest, well, not the biggest, but the best channel on YouTube TV. Become a member. Right, there is the Meta earnings. Now, what we're going to do, I've got to go from this show to that show. So rather than having you all sitting around doing absolutely nothing, what I'm going to do is send you to the extra channel. This is behind the scenes where we go in between channels, so I can take my jacket off and have a cup of tea and get the studio set for Meta earnings. So here is extra. This is where we're going to go right now automatically. So what I do is I click this button here and I send you automatically through to the extra channel. Redirect to the extra channel. There you go. This is behind the scenes for everybody, okay? There it is. You will come here automatically in a few moments. Then you can carry on talking to each other, supporting each other, learning about what's going on here in the extra channel right now, right? It is open to view and listen for everyone. However, if you wish to chat, we are members only. It's only 99 cents. The reason we do that is we want a safe place 12 hours a day for our traders to trade and invest, talk with each other and get great information. As you can see down here, people are talking that everybody's a member. It's only 99 cents. And the reason we do that is it stops bots, scammers, people coming in going, buy Binky Bonk, it's great. We don't want that. We're serious investors. We're making real money consistently. And we don't want people talking rubbish, coming in, spoiling it. So if you want to engage with the members, from 99 cents, you become a member. Then what will happen is the moment I've turned this show round and I'm ready for Meta, I will put the link in here. I'll be talking to you live anyway because it's behind the scenes. Meta earnings is in a minute, DFJ. I'm explaining it all now. I'm doing it right now. So you'll go into here. I will talk to you. You'll be able to hear what I'm saying behind the scenes in the extra channel. I will say, right, guys, I'm going live now for Meta earnings, and we'll be discussing it, sharing the prices, and all the rest of it as it happens live in the show. Okay? So that's what's going to happen right now. So without further ado then, let's do that. Let's clear the boards. I hope everyone has tapped the like button and subscribed and rung the bell. So I'm going to send you now to the extra channel. If you have missed any of these important videos, you may have done. There's been a few very important videos just gone out. Go on the homepage, Go to the videos and you can see some very important videos. I've just posted about 6 videos today you may have missed. If you've not got a red line underneath, you may have missed. Now, just before I let you go and send you to the extra channel, have we still got people with me? Yes, I have, 95. I'd like to ask a huge favor. I'm trying to raise millions of dollars for charity, where I will do all the fundraising for free. They will get all the money, no charges, no fees, no credit cards. Please go and subscribe to my music channel. That's where the concert will be. And all your favorite concerts, I will do them for you for your charities. If you click on that link in the channel now, the music channel, you don't have to watch any of my videos. You don't have to be part of it. Just subscribe. I only need 10,000 subscribers. I've currently got 5,880. And then I can do concerts and YouTube turn on charitable giving. And I can do fundraiser concerts for those that are registered charities. And when I do that, all the money, all the ad revenue, everything will go to the charities. And I want to do lots of concerts and raise millions of dollars for charity. It's the one thing I really want to do. And all you got to do is subscribe to me. I've given you the link in the chat. I hope you've all done that now. Everyone's got money here. I'm not asking you to give me any money. I'm just asking you to click subscribe to my music channel so I can raise millions of dollars for charity. And I appreciate it. Okay, let's now go over to the extra channel, and then we're going to jump straight into the earnings for Meta. So without further ado, let me go to this screen. I've already selected it to work. It will go automatically. You've already got the link as well. So you've got that, but let's do it right now. Thank you for tuning in. Thanks for supporting me. Oh, Bruno just subscribed to the music channel. Thank you so much. Whenever you subscribe to the music channel, if you are a public subscriber, it comes up and I can read your name out. That is wonderful. Thank you, Bruno. It's cost you nothing, but it enables me to raise millions for charity. That's great. All right. Thank you very much indeed. See you now on Extra as we get ready for Mark Zuckerberg and Meta earnings. What a great day. Until next time, as always, take care of yourselves and each other.